Thank you very much for your time, ladies and gentlemen. Good morning for everyone in the Americas, and good afternoon to everyone in Europe, Africa, and Asia. So my name is Alejandro Cardini. I think it's easier for everyone just to go with Alex. I'm going to tell you a story about how we're driving financial inclusion and empowering lenders to possibly impact on customers' financial life through Latin America using data and analytics. And I represent the company called Circulo de Credito. So let me tell you a story. Circulo de Credito is a regulated credit bureau in Mexico and Peru. We started as in 2005 as an initiative to drive financial inclusion. Let me tell you a little bit about the story of credit bureaus and data in Latin America and in Mexico in particular. In 1994, there was a very large financial crisis in Mexico where banks actually had to have bailouts by the government due to insolvency. Due to this, the government asked banks to cooperate and create a credit bureau in Mexico. In 1995, the first Mexican credit bureau was born. However, this contemplated data mainly for traditional financial institutions, large banks, and this left a large portion of population unavailable and without credit history. So 10 years later, in 2005, we came into the market and obtained a license to operate as a credit bureau in Mexico, where we were able to issue reports on credit behavior for individuals, for consumers. In 2007, both credit bureaus started legally sharing information, sharing negative data on users. Whenever there was a default payment on a loan, we would share that database between Circulo de Credito and the other Mexican credit bureau. Going a couple of years ahead, we partnered up with FICO, one of the leading scoring institutions in the world, to bring in more sophisticated financial scoring into the Mexican market. However, this was not the only option to bankerize the whole amount of people that were not getting access to credit. Finally, in 2016, we launched our operations in Peru, and we launched an extended score, which I will drive deeper into in the next couple slides. And to this day, we are the second largest credit bureau in Mexico with over 200 employees. So to provide a little bit of context about Latin America. As you probably know, Latin America is an underperformer in the use of formal or semi-formal financial services. Around 65% of the population do not have access to formal or semi-formal financial services. This has a huge impact. Why? Because it reduces competitiveness for people in the region. It makes financial service much more expensive because they're informal. They make it insecure and tend to generate abuse in financial services relationship. And finally, it leaves disadvantaged communities prone to crime, fraud, and abuse, both by their families, by criminal organizations, and by informal businesses. This turns out to be a lack of access to opportunities. So having a lack of access to financial services leaves people who are disadvantaged, even more disadvantaged, and with less tools to make front to the obligations and to everything that needs to happen in their life to have a better future. We wanted to change that. So there's a cultural aspect to financial lives that doesn't really help in Latin America either. The cultural and social context have a significant impact on personal finance, and we have two factors that I want to emphasize: both gender inequality, which, as you know, in Latin America is referred to as machismo in many ways, where man is privileged and the woman is underprivileged, and we have very poor levels of financial education. What this means is women are often denied access to education and work opportunities, and this results in even higher vulnerability, abusive relationships, managed control based on their income. So this makes coercive relationships thrive, and turns out to be a lack of access to opportunities and having women stuck in situations that are not positive to them. Also, the poor levels of financial educations turns out as a reason to have to commit naive and basic mistakes related to personal financial management, which is just a tragedy. So, as Circulo de Credito, a registered credit bureau in Mexico, we wanted to change that, and we started thinking about ways of changing that a couple of years ago. So we devised a series of strategies to tackle the three main pain points for the underbanked. The underbanked population has three main pain points that I want to emphasize. One, the lack of access to credit or formal credit, the slim chances of generating a credit history, which in turn results in lack of access to credit, and a high vulnerability due to lack of financial education. So what we've done, we started off in 2005 to help the underbanked have access to credit. We partnered with non-traditional financial companies such as microfinance, retail, telcos, even public services such as the public water company and the public energy company to help people and help them use those data points as positive and negative credit history. And this gives access to millions of people to credit each year. We have over 70 million people on our databases with at least one data point of credit. And also to reduce the vulnerability of the lack of financial education, we extended our services to help underbanked niches obtain products which can be easily managed by them. So this generates a positive relationship between financial institutions and consumers instead of generating negative interactions that result in default, less credit, bad credit history, and a lack of access to opportunities in the future. That's why I want to talk to you about these two products, which I believe to be quite disruptive and innovative. These solutions were created both internally and with key partnerships to help drive decisions across a very vulnerable niche of people using our data. So first of all, I want to talk to you about the extended score. As I mentioned before, women and young people are prone to having abusive relationships related to their financial management and financial access. So we created what we call a household score, in which we can take into account the credit behavior at a household level in a way in which people behave. For example, if traditionally the man is the one who has all the credits and has the credit cards and the formal income, then we can use his behavior to try to predict how either his overage children or his wife or spouse or any woman who lives with him, and we try to use this data to predict how good his family is going to perform in loans payments. So this identifies the probability of default of an individual based on a shared address, and this is very innovative because it helps drive decisions that would normally not be included in the financial life cycle. However, they are included because we've developed a valid model to do this. And so far, over the last 3 years, we've had 5 million credit decisions that have been made using our standard score. And this is very relevant because if our standard score hadn't been used for these decisions, it probably would have ended up having women and children, and young people not having access to credit. And having access to credit is it's basically what I believe to be a common standard, and it's to be a right. And finally, we also devised this product called Financial Index Profile, which allows lenders to identify the maturity profiles of their customers and thus offer an appropriate product. For example, if all your credit history allows us to believe that you're ready to manage a revolving credit, then lenders can do a tailored offering to do that. However, they might reconsider if you don't have the financial maturity to do this, because giving you a credit that you will not be able to manage is pretty much a recipe for disaster. It just makes people go into default, and there's very good payers that due to bad financial practices have been given products that make them go into default, and that's simply not fair. So the benefits for that is that consumers benefit from products that suit their needs and that they can manage, and therefore help them have a positive financial life. So what's our business model? As I mentioned before, we are a business-to-business company. We work with lenders directly, not with end consumers. We work with lenders such as banks, microfinance companies, FinTech companies, telcos, retailers, in order to better profile their customers into different niches and segments, and therefore make better decisions. We obviously charge a transactional cost in order to have access to our analytic models and our data. I think the best part of this is that the benefits are free for consumers. So they're benefiting from being financially included and for having tailored products free of charge. And we believe there is no direct competition for this product, as the way in which we calculate household and the whole development between analytics of shared address is a proprietary tool of Circulo de Credito, and no other registered credit bureau that could be able to provide this service has access to this data. And sincerely, it doesn't seem to be their focus. I also wanted to talk to you about how specifically this year has impacted on our business. The COVID-19 created also a key opportunity for Circulo and the FinTech industry. A lot of people were being profiled using only digital tools, and this increases the need of financial lenders and financial institutions to have access to more sophisticated data analytics services. Because most of their consumers were migrating into non-alternative digital lenders. So we saw a spike in the consumption of our products, mainly due to the digital gap that needed to be solved from financial institutions and their customers. So this resulted in having us serve over 95% of fintech companies in Mexico with our decision solutions. So I also believe this to be a great indicator of the impact that this year had on our business. So here are some key takeaways I want to emphasize and make sure we're all on the same page. As I described, being a woman in Latin America is very complicated. Being a poor woman is even more complicated. It makes things very difficult for you. It makes women be very prone to aggressiveness, abusive relationships, fraud, and being involved in crime. It represents a huge liability when having access to financial services. And as we know, financial services are an opportunity which can alter education, work experiences, and many opportunities in life, which can reduce the socioeconomic gap, which in Latin America is huge. We also believe that all of this, gender inequality and wealth and wealth gap, is a consequence of how the system works. The system is not working properly. It's segmenting against people who might be credit worthy, but the system is not considering because of the way we work, and it's biased. So Circulo de Credito created these products to solve this directly. And our household score has been used in over 5 million credit decisions, of which over 70% have been to improve the credit score of either women or young people directly. And this is very relevant because it has helped these women and young people have access to financial well-being and more sophisticated formal financial solutions. So what is our ask? We want to continue positioning our products to improve credit conditions in the Latin American market. And basically, what drives a company such as ours, which is based in data analytics, is the access to data and sharing data itself. So we want to invite both private and public organizations, particularly central banks, who might have access to more data than we currently have, to partner with us to develop products that are innovative, disruptive, and can in a joint venture model generate impact for the Latin America financial ecosystem. That's everything. Thank you very much. I'm now open to questions.
Great. Thank you very much, Alejandro, for your great presentation. I would like to invite our panel of judges for questions.
Of course.
Okay. Hi. I hope you can hear me, Alejandro. Thank you very much for your presentation. I have a whole host of questions, but I'll do them in little blocks to allow others to ask theirs as well. I'm not quite getting how this improves access to finance for women, given that if you are making an assessment in some way based upon the household, and a woman has been financially excluded in the first place, that usually has significance as to the relationship and that the man being in control of the money. How, therefore, can a good credit score generated from you have any relevance to the woman's ability to repay if the money she has been or has is taken away by the husband?
That is obviously a very specific case. I think the basis of any predictive model such as ours is based on comparing the model performance and the repayment capacity after, like, through time. So by now we have quite mature data showing that our score has a good ability to predict these conditions. It obviously cannot.
Sorry, Alejandro, could you give me a specific number? What are sort of the default rates like based upon your positive predictions of credit score?
It really depends on the score, on the specific score. The default rate for a credit score is mainly associated to the score itself. However, we have another metric which is called KS, Kolmogorov-Smirnov, which is a statistical tool to analyze how good a score is. And our score is typically around 45 to 49 KS points.
Okay. Thank you. I'll let someone else speak.
Alejandro, we have 3 questions from the global audience. I will start with the first one from Mohammed. What are your methods to bring in utility companies or telecom companies in order to receive their customers' credit history?
Of course. So that's actually a great question, and that's been a huge challenge, considering telcos are not public, but they're not regulated in Mexico and Peru. So basically what we do is we partner with them in a sense that we'll invest resources into sort of digging through their data, putting it together, making sure that the quality is there, and establishing a process for reporting that data. And then we'll allow them to report directly to us. And for example, utility companies, most of them are public in Mexico. So what we've done is we've done also partnerships in which we install software, we do the data wrangling and the data feeds, and just simply generate a very specific command prompt in which they can easily deliver the data to us. So it's been a quite intense journey to bring those companies into reporting credit history, because they're not as used to structuring the data in such a way. However, just to answer your question very specifically, we help them and invest resources into making it as easy for them as possible.
Thank you. Yes, go ahead, please.
Hi, Alejandro. Thank you for your presentation. I do have a question related to compliance with data protection. How do you deal with that data protection from the consumer? And do you get the consumer consent before uploading this data to your solution? Thank you.
Of course. Yes, consumer privacy and consent is very important to us. It's basically the driver of our company. How we understand our data is we do not actually own the data. We're simply a medium for end users to share their data with financial institutions in a structured way. So we're a highly regulated company by Mexico's Comisión Bancaria, which is the regulator in the financial industry, and we're not legally able to provide any data point or sensitive credit data a single person, unless we have their consent. And it usually can be done in three ways. Consent can be through physical signature, which is obviously a method that is not quite growing, considering a lot of the digital economy has been thriving. We can also authenticate users using a question-based system in which we provide lenders with a widget which they can implement in their digital platforms. And through this widget, they will ask 3 questions about the credit file of the person. And if those are correct, and they can only be correct by the owner of that credit data or credit history, we will allow access to that. And we recently created an application which authenticates the user using the mobile phone, in which they can scan their national credential or passport, and then just grab their phone and point it to their faces and say they agree with the bank having access to their credit history, and we validate that the person in the national identification or passport is the same that was on the video, and we generate a token for that. So all of our queries are based on user consent.
Okay, thank you.
Alejandro, how do you make money?
It's a transactional business model. With every transaction that a credit institution makes to us for either data or scoring services, we charge a fixed price.
Okay, but a consumer has the right to their credit score. So what stops them just taking their credit score from you and taking it themselves to an institution?
Nothing. That can happen.
Okay.
I have a question, Alejandro. Muchas gracias por la presentación. Hay una cosa que México, Perú y Ecuador comparten, y es una presencia importante de organizaciones del sector financiero popular y solidario, cooperativas y cajas de ahorro, con una presencia fundamental en territorios rurales. El modelo que ustedes han desarrollado piensa en un perfil de crédito para los socios de estas organizaciones que tienen, por supuesto, características distintas a los de los clientes de un banco?
Should I answer that in English or Spanish?
Alejandro, could you answer in English? So, Margarita, and in the interpretation section below in your screen, you have to select Spanish.
Okay, so thank you, Margarita. That's actually
Did you see the interpretation section? Okay. Go ahead, Alejandro.
Thank you. That's a very good question, Margarita. And I think I wasn't emphatic enough about this, but we were born not from a traditional financial ecosystem, but more from a popular and non-traditional microfinance ecosystem due to the lack of credit history in the most disadvantaged population. So there was this huge need for credit history in a population which was not traditionally a customer of traditional banks. So we work, our most intense relationships are with microfinance companies. And obviously, given that those microfinance companies work with us and feed us with data, our models are tailored for that segment you mentioned in particular. So our model performs well in this specific segment.
Thank you.
Alejandro, we are running out of time, but I have 1 or 2 questions more, if the time allows. How is the uptake of consumers willing to submit their data, and also the financial institutions' willingness to use that data for credit scoring, those with no access to financial services due to the lack of credit history?
Okay, so just to make sure I understood the question, because I feel it's two questions. One is, how is the uptake of consumers willing to submit their data, like at a personal level? And then what is the willingness of financial institutions to use data for credit scoring with those people who have no credit history? That's right.
Maureen Mulenga, we understood well your question.
Okay, perfect.
Yes.
So perfect. Thank you, Maureen. So we're working on very specific consumer-centric initiatives in which consumers can allow us to have more data on their profiles, particularly using initiatives such as open banking, in which consumers can share more data around their non-credit life, such as debit accounts, investment accounts, even mobile phone accounts, those kind of things. We're integrating and doing trials around that. Being completely honest, it's something that it's quite new. So we're just integrating it this year. I will be very happy to share the results of that next year, but I think it's very positive. And we're allowing them to submit data in a completely digital process. So I think that answers the first question. And then the second question, well, obviously financial institutions would like to have the most data on as much data as possible. It is obviously not possible for all users. Not everyone has a credit history. However, we haven't found particular obstacles in selling these kind of services to financial institutions, even if a person doesn't have a strong or a very full credit history, because as I said, we created partnerships to consider a lot of things credit history, and we have a strong hit percentage, which is around 95%. And even in those 5% of the cases which have no history at all, we are able to score at least in some way their probability, obviously with less precision because we have less data points, but we're still able to score it. So I think the willingness of financial institutions to use scoring services is proved.
Thank you very much, Alejandro. Unfortunately, we are running out of time. And thank you very much for your great presentation.